Hi everyone, and welcome back to another video. Today I'm going to take an overview look at the cryptocurrency market and really focusing on Bitcoin here and the current move up that we've had and the current month and the current downside month that everyone's panicking about and getting really flustered. And I think a lot of people right now are getting really impatient, and it makes sense because we've seen the market rise over 100% in a couple of months, and everyone now who wanted to jump back into the market at the highs here, these people are expecting major gains from this point. But anytime we've seen a major move in Bitcoin's history, for example back in 2019, big move to the upside here, although that was a lot faster and a lot more parabolic, you could really see that it needed to wipe them people straight back out. So I think we could get a couple of scenarios here, and my favoured scenario really for BTC is where we come back and at least retest the top of these monthly candles. I know everyone wanted to call for 25,000, and although we've got a nice rejection at the 25,700 zone, is that enough? I just don't know. I think a lot of people are switching sides, long, short, too much around here, and I think it's creating a lot of trapped liquidity. So I do think if Bitcoin was going to head back down to these monthly candle closures, really get a nice base of support here for BTC, that'd be a great sign because everyone's expecting 25,000. And I think a lot of stop losses would actually be placed below 25,000 because of the rejection that we've currently had from the high 25,000 zone. So it makes sense, in my opinion, for BTC to have a little bit of a cool-off period. We've had 1, 2, 3, 4 months to the upside with no real pullbacks apart from this one here, which was quite a big pullback, but you can see the monthly close actually closed green anyway, so it will have brought a lot of people back into the market here. Bit of an indecision candle. Come on, I think BTC realistically, if it's going to come back down on the lower time frame, 23,000 is going to be the zone. I don't think we'll get support at 25,000. There's too many people calling for 25,000. But let's turn our attention to the upside, because look at the empty space to the upside, guys. These are the projections that we've been looking out for since I started my YouTube channel, really. Started the channel in a bear market, so obviously not the best time to start the channel. But at the same time, it meant I was not starting the channel up here and shilling altcoins to absolutely everybody, and everyone's going crazy and euphoric. So look at that empty space up there, guys. I do think at some point over the next 6 months, BTC is going to actually test that zone 50. So when thinking about this logically, really on the higher time frames, I think these are the big swing levels that you want to have marked out on your charts. I think any other levels really are going to be very much so manipulated, like this level here that everyone seems to be thinking that you're going to be able to get a nice easy short from, back down to absolutely crazy low levels. Too easy, in my opinion. I think that's just going to provide the liquidity, actually. People shorting above these levels, stop losses placed above there for that nice big squeeze to the actual real liquidity level that we've been looking for quite a while. That to me is just an too easy trade, too easy from the market makers. Just like when everyone was expecting the market to fall back down to 10 and 12,000, everyone was thinking we're going to come back to clear support, but we was making them videos down here saying too easy. Again, I think that would have been way too easy for everyone to just wait for that level and then get the bounce, the market front run it. And again, I think possibly with the reaction that we've got here at the high 25,000, it's bringing a bit of psychology, everyone thinking perhaps we're going to go from here, although we could. I think that would provide the liquidity again below 25,000, take them stops below 25,000, come back to that real structural level. 23,000 is going to be the zone I've got my eye on, and then just really looking for that higher time frame move to that 52, 53,000 zone, because we've been eyeing up the Fibonacci's for quite a while, from the candle body closes to from the highs to the lows, and you can see 786 really at the 252,000. So really that is the zone that I'm looking for. Been looking for it for ages. When I've started my YouTube channel in the bear market down here, people commenting and people saying to my tweets, what about the macroeconomic conditions? We've got to go down. We've got to go down. It would have been too easy. Way too easy. Just like this level here would be too easy to short from, in my opinion. All these liquidity levels above there's nothing really in the market stopping it up until this level and these high liquidity levels that I think the market makers are going to really look to seek. So really just remove these drawings off the chart there. Nice zoomed out perspective. Everyone was waiting for lower. They didn't get the chance. It's why we was buying, and it's also why we were selling a percentage up here, because up at the 31, 32,000 when altcoins was going a little bit crazy. You've seen what I was doing with H bar, buying down here, selling up here, really playing the volatility that the altcoins offer in the market, and really not so much BTC, although everyone has their own strategy and their own plan. That's just what I like to do, and I post every time I'm going to be able to buy, sell, major buys, major sells. I will be posting on Twitter, so if you haven't followed me on there, go follow me. And I'm just going to jump into the lower time frame, have a little look at the Elliott wave stuff, see if we can get a really nice clear idea of some clear zones that we want to be watching out for to the downside and to the upside, and we'll finish up there. So I've just dropped us down to the daily time frame here. I think it really offers the best perspective on the lower time frame. Don't really want to be going so much lower, because the lower we go, the higher manipulation that's going to be going on the lower time frame, trapping traders long and short. I think really sticking to the higher time frames here is going to be the key to being able to keep you cool in the market and really riding this wave to the upside that I do believe is going to come. So really from the outlook of what I'm seeing here, when we was calling the bottom down here 15,500, looks to me like a really nice 5-wave move. I don't think anyone's going to argue with that, and I do think that was a completed correction, so I'm going to go ahead and call that wave 1 to the upside, 1, 2, and we're expecting that third wave to the upside with the last wave going up into the 50,000 zone. So we just need to try and figure out now, where are we in this lower time frame move, and I do think again we've got another 1 here. I think the first wave right there is finished, and we've just been really going through a sideways WXY. It looks to be a WXY, it could be an ABC, not really too sure here, but it looks to me like we possibly need that final dip back down into that higher time frame zone. Because imagine if you can get that first wave to the upside with a nice weird trappy correction, trapping the longs, trapping the shorts, going for that final liquidation below them levels, below 25,000 that everyone's calling for, then get ready for that third wave to the upside. I think it would be perfect. So I think let's just remove that all off there. So if we can imagine that's your first wave of the third wave to the upside, looking for wave 2, whether it's done now or whether we've just got that final dip down to 23,000, this is the wave structure that I'm looking for on the lower time frame. And so although this might look a little bit messy at the moment, I'm just trying to piece the puzzles here together on the Elliott wave theory and the Elliott wave structure that we're seeing. If this is a 1-2, 1-2 to the upside here that we've got, and we're really working on that third wave to the upside, you can see the proportions here of this big wave to the upside and then this second 1-2. It would mean the wave 3 to the upside is going to be much bigger than this first wave, and it really has heightened my expectations of this move to the upside, and it's really why I'm thinking about that 52, 53, and even the highs at the highs for BTC up around 60,000. It's why my proportions and expectations have gone a little higher than what I anticipated when I was making those videos down here about saying going to 42, 43,000. I do think it's going to enter the 50,000 zone at least with the proportions that we're seeing here. So what we can do is, if you have a look at this first correction to the downside, wave 2, I would expect this second correction from wave 3 up here to be at least double the size of that. So I want this correction here to be at least 35%. And I know that might seem absolutely massive at the minute, but we've seen major corrections in Bitcoin's history where it's 30, 40, 50%. I don't think we're going to get away with going up in the market here without getting at least one of those 30-40% corrections. So these are the things we need to be anticipating in advance, because you can imagine if we was to get up there and see that 30-40% crash, everyone will be calling for the end of the cycle, and just once again I think that would provide the liquidity for that final fifth wave to push into them zones that we're expecting. So let's just pull the trend based Fibonacci here from the first wave, high to low, and that can give us some really key structural levels from what we might be expecting. You can see there the 3.618, 54,000, really key zone, and that is what I'm expecting to be hit no matter what happens on the lower time frame here. But if we can anticipate that, and we anticipate another trend based Fibonacci here from the high to a potential low at around 23,000, you can see the confluential levels here that we've got at the 2.618 for this Fibonacci and the 3.618 for that Fibonacci. So that zone can then be extended. Although these are rough ideas, that zone can be extended into this Fibonacci and give us a really key psychological level. Break that 50,000, get everyone talking about, here we go, it's new all-time highs, and then look to put in at least an ABC correction back down, get them 40% corrections, 50% corrections like we've seen before. That could be the end of the move. It really could, with a WXY to the downside, ABC, don't know what we're going to get. Or that could simply be a first wave to the upside. We get a 1-2, and then the third wave that we get after this is absolutely humongous. So I think what I'm trying to point out here is, guys, the possibilities are absolutely endless, but taking a look on the higher time frame of the real key levels, thinking about it psychologically, where the liquidity is in the market, not being worried about this 23,000 potential drop, really setting our focus on that 50 to 52,000 liquidity area, really to look to at least take a percentage profit up there. I do think that would be a good idea, because at that point I think everyone would be calling for new all-time highs. The bears would become bulls. The bears of today would become absolutely bullish, and I think the people entering the market down here would possibly recognise that and start to sell, and we get to a point where we need to reach a bit of an equilibrium up at the highs, these liquidity levels, and settle down for a little bit, whether it's an ABC correction or go down and set brand new lows from this low here that everyone's calling for. So the market can do what it wants, but just anticipating this, setting out your key levels on the higher time frame, really setting out with a bit of a plan as well, like what we've been doing with H bar. If you've been seeing the plays where we was buying down at the lows, selling as the market was going up here, ready to buy on the next dip, and our buy zones are set on the altcoins, not really so much on BTC, but we do need to analyze BTC because it is the king of the market at the minute. So guys, if you like this different style of video, give it a like. I do appreciate it. Any comments also appreciated, and of course subscribe. Sit back, relax, and let the market do the work, and I'll see you next time. Cheers.